This is an example of a real spreadsheet of trades, real trades that I've done over the past couple of years, or that I did a couple of years ago. As you can see here, you have different ones like BPT, PBR, HCAI, SUNS, TNH, SGH. There's oil royalty companies, the U.S. Canadian RET, which is Real Estate Investment Trust, the Communication Company, a Business Development Company, Nitrogen Fertilizer Products, Gas Royalty Trust. The companies themselves don't really matter as far as what they do and so forth. Whether it's a buy or a sell, these are some of the actual things I've done over the last couple of years, the pricing, the fees, and the number of shares, 10 shares each for those. You just go on, you look at these, and you say, okay, this is how much it costs, you know, for the totals and so forth. And then you have what the actual pricing was, the shares, and some of the extrapolations we've had, and what we need to do for certain things that I've done to be able to pay people off and so forth like that to make some money out of the stocks. And in this particular case, you can see that we were selling a house and investing and projecting that information onto some of the ones we wanted to invest in. If you invested through a certain time frame and so forth, which of course we did, and so forth like that, blows the money that you left after the taxes and so forth, and all of these sorts of things. Worst case scenario, you double your current income, if not nearly triple it, according to having sold the house and invested the money and so forth, and the amount of income that you have at that particular time, as opposed to how much you have if you worked a regular 2,000-hour job for the year. So you have some of the scenario here for what you have every month if you have investments and so forth. Then you go through and you say, okay, well, you start out, say, September of that year, and you have $1,934.17 per month for the next few years. In this case, it's probably somewhere around the next from 5 to 10 years. That's how you figure out how much you would actually have to when you repay yourself for the dividend that you've had, that you've invested, and so forth. So around that time, around 2025 at that particular time, around 10 years or so at the time, you'd have your money returned to you in the form of dividend payments every month. In this particular case, it's a monthly payment that you'd get. If you don't reinvest through that time period, then you'd only have your $250,000